Hello and welcome to Business Mornings, the final few trading days of September. I guess it's almost time to say goodbye to September at this point. But let's see how your money performed last week, and we'll get a sense of what to expect in the trading month of October. But we'll see Nigerian Exchange Limited close last week on a bullish note as turnover surged with investors trading 7.68 billion shares worth about 494 billion naira, far outpacing the previous week's activity. Rally was fueled by strong demand in the oil and gas sector, which accounted for 391.36 billion naira in deals, while financial services continued to dominate trade volumes there. So we see the rise for last week, 0.20% up there. We see the equity cap almost at 90 trillion, almost back there for the last trading for last week there. Let's get a check on volume now. We see it's the value in deals that was lower than the previous week. That's a total trading with the 116,000 deals. That's what we had for last week. And we look at the sectoral performance now. We see the likes of banking, consumer goods, industrial goods. That closed in the green for the week. Laggards, insurance, and oil and gas, 1.62% down. But we see the banking counter, financial services, that did better. Normally, they follow each other. That's banking and insurance counter. But last week, we didn't see that followership right there for the sectors that we track. Let's get a check on the oil market. Now, we'll see today, we see the market there kicking off with some weakness, but still $69.55 a barrel for Brent, almost there at the $70 psychological resistance level at this point. WTI crude down 0.96%, trading smack on $65 per barrel there. We see today crude exports from Iraq's Kurdistan region resumed after a 2.5-year halt, while OPEC Plus signaled plans for another production hike in November, raising concerns about oversupply. And so we see the impact there on Brent and WTI. For the trading week last week, we see Brent and WTI did try to eke out a gain, even though the week started off quite weak there for price action, but we see a kickoff getting to about $69, from last week into this week. So we'll see if this holds, and if maybe a break above $70, that might be in the workings there. But we'll see definitely a lot of volatility in the market there. All right, to other stories now. Back here, billionaire businessman Femi Otedola has refuted allegations linking him to Nigeria's subsidy fraud, describing a recent publication by Mar Sani, former aide to ex-Vice President Namadi Asambo, as false, malicious, and an attempt to rewrite history. In a strongly worded statement, so Otedola clarified that his company, Zanon Petroleum and Gas Limited, never traded in premium motor spirit and therefore could not have benefited from the Petroleum Subsidy Fund. He insisted that he was, in fact, the whistleblower who first alerted then-President Goodluck Jonathan to the fraud in the subsidy scheme, later reporting it to Senator Bukola Saraki, which triggered legislative investigations. Mr. Otedola also recounted how the Farouk Lawan probe panel was allegedly hijacked by subsidy fraudsters, noting that his involvement with the Department of State Security in a sting operation against Lawan is a matter of record, one that eventually led to Lawan's conviction. He urged President Bola Tinubu to release the full Igboje Democratic reports to expose the real subsidy thieves, while dismissing claims about his dealings with AMCON as mischief, citing that he had already forfeited assets worth hundreds of billions of naira to settle obligations. The businessman, who recently authored Making It Big, has now instructed his lawyers to file a 1 billion libel suit against Mr. Sani, warning that reputations must not be toyed with for cheap propaganda. All right, let's get to our first conversation now. See, Nigeria's energy security has come under strain following a labor dispute between Dangote Petroleum Refinery and Pengasyn. The union's directive to halt crude and gas supplies in protest over alleged mass dismissals. That's raised a risk of fuel shortages. So we'll drill down on what this means for Nigeria's oil and gas sector and the average consumer at this point, right after this break. Just stay with us. And it's another day, another discussion about the Dangote Refinery and the impact with Pengasyn, Dapman, and all the oil marketers at this point. And, definitely there's been a lot of talk about what to expect for consumers, for Nigeria's economy, if we have that industrial action at this point, now that we're enjoying GDP rising from other quarters, and we're also kind of looking forward to a better Q4 that's for GDP growth in Nigeria. Let's see how all of this plays into the sentiments and the markets there. Joining us for this conversation, we have Mr. Nick Gule, is an oil and gas expert, joining me from our Abuja studio. Great to have you in the show, sir. Good morning.
Good morning, Ladi, and good morning to our viewers globally. Happy to be here.
Fantastic. It's great to have you. Well, let's look at the matter now from an energy security impact, perspective. How could a prolonged disruption, at Dangote Refinery, how could that affect domestic fuel availability and, pricing in Nigeria? Not to forget that, the prices, even though we've had stable prices for a while now, we still have a couple of Nigerians still, struggling with the current price, of PMS at this point. And now we have the labor side of things, coming into play here. So, break it down for me. How are you seeing, all that's playing out? Because it seems ever since we had this refinery, it's just been one thing after the other.
Thank you very much. If you ask me, I would say this is a dispute that we should not even contemplate, because fuel is very important to the economy. In the Nigerian economy, fuel is important not only because it mobilizes engines like cars and trucks and all of that, but it is also used for power generation. So if we have a disruption in the fuel value chain, it's going to have a big impact, a big negative impact on the economy, on the livelihood of Nigerians, and it will destroy businesses, and the confidence in the economy will be dampened. So this is something that shouldn't happen. And for me, my position is clear. We are a nation of laws. When we come to labor laws, we have a coterie of labor laws. We have the Nigerian Constitution. Then we have the Labor Act 2004. Then we have the Trade Unions Act. We have the Employee Compensation Act. We have the Pension Reform Act. We have the Minimum Wage Act. And we have the International Labour Organization laws that we have subscribed to. So there are a lot of laws governing labor in Nigeria. And what then has to happen is that both Dangote Refinery and the unions, which is Pengasyn and Nupeng, they all need to comply with the laws. If they comply with the laws, then everybody will be happy. That means Dangote will be happy, the unions will be happy, and Nigerians will be happy, and our economy will be the better for it. So, before Dangote came on board, we had the NNPCL refineries that were not working. Then we have an importation regime, and then we had the unions who were part and parcel of all of that. But now that Dangote has come on board, something is going to shift. There's a new dynamic. And what I'm saying here is that all parties now need to understand that under this new dynamic, everybody needs to just stay within the laws, stay within the boundaries. So for Dangote Refinery, they must understand that by the Constitution of Nigeria, by the labor laws that are already listed out, their workers have a right to unionize if they want to. Because there's freedom of association in our Constitution, and the Trade Union Act is very clear on that. And then the unions also need to understand that they cannot just wake up in the morning and say we are grounding Nigeria's economy to a halt. There are processes that you have to undergo to be able to call a strike, right? And then there are things that they need to do with the laws that we have for them to be able to get to a point of striking. So this is my position. Let everybody stay within the laws.
All right, so in your opinion, who has the power to stop gas supply to the Dangote refinery?
So if Pengasyn and Nupeng have their members who are responsible for gas supply to the refinery, and they want to go on a union activity of stopping such a supply, they could. But what I'm saying is that you can't just wake up in the morning and do that. You have to follow the laws. What are the laws? Have they given the appropriate notices? You know, have they even considered legal action? You know, so you can't just wake up in the morning and want to shut Nigeria down because you have access to critical national assets. Because this, what we're talking about here is national security. Because if we don't have petroleum products, I mean, even if our security agencies and all of that, they will not have fuel in their vehicle to be able to tackle insecurity. So everybody must just stay within the laws, and everybody will be safe.
Right, and you know, talking about staying within the laws, how should unions like, you know, Pengasin, how should they balance, you know, workers' rights, you know, with the wider public interest, you know, at this point? What do you think should be the right move, you know, from them, you know, aside, you know, going to the courts and all?
So the Dangote Refinery has no choice. If their workers want to unionize, they have no choice. Their hands are tied. They will have to allow these workers to be unionized. Because at the end of the day, we need everybody. We need Dangote Refinery because Dangote Refinery has come to remove shame from us. The shame that as one of the world's largest producers of crude oil and perhaps even gas, we never had refineries. And the NNPC, now NNPCL, continue to give us hope. But we never had refineries. So we're importing 100% of our petroleum products, which was a global shame for us. And Dangote has come to do that for us. So we like Dangote, we want him, we want his business to succeed. But at the same time, we also love the workers. Because even if you have a refinery and you don't have workers, then no refining activity will take place. So these workers also, their interests must be protected, and the unionization means they are able to get collective bargaining, and they are able to ensure that their employer is treating them well in accordance with the laws of the land. So we cannot say we are going to be for Dangote Refinery alone, or we are going to be for the workers alone. We are for both of them, but we want each and every one of them to carry on this activity or this dispute within the laws of Nigeria, and we know that the laws are robust enough to protect the interests of all.
And what would you say are the risks of framing legitimate labor disputes as, you know, economic sabotage? How do we draw the line there? Because at the end of the day, you want workers to be able to, you know, be protected and also, you know, speak when they feel like they're being treated unfairly. But you don't want to tag such moves as economic sabotage. So where do we find the balance here?
Well, I think if the unions go through the motions as dictated by the law, and their employer is not willing to come to the table for them, then they have a right to strike. That is also protected under the Trade Union Act. You know, and I would think that Dangote Refinery should not take a position that would lead to the workers going on strike. Right? So Dangote Refinery has a duty as an employer to also stay within the laws. And if the laws allow the workers to unionize, then the workers must be allowed to unionize. However, the law is clear. A worker is not bound to unionize. A worker can only unionize voluntarily. And a worker is not bound to belong to a specific union. So the position of Nupeng, for instance, that these workers should belong to Nupeng is wrong. That's a very wrong position. The workers can belong to any union of their choice. And I know that Nupeng is facing competition right now with the truck drivers union that has now been formed. And Nupeng has nothing to do about that. If another union has been set up and is legitimately recognized by our laws, then workers can belong to that union without Nupeng doing anything about it. And I want Nupeng to know, and Pengasan also, that they cannot take Nigeria for a ransom. They cannot wake up and say, oh, we are going to stop gas supply, we are going to stop petroleum products on this day without going through the motions, because they are not a law upon themselves. They are operating within the laws of Nigeria. They were licensed by the laws of Nigeria, and if they are breaching the provisions and the conditions of their license, then the government is right to revoke that license, and they will no longer be recognized as a union. Because I have a problem with NUPENG. NUPENG is very militant, is very activist, doesn't want to go through the motions. And if you want me to vent my spleen on NUPENG, I can do that, because part of the problem we have in this country right now is caused by NUPENG. When in 2007, the President Obasanjo government sold off the refineries, it's NUPENG that came forward to say, no, the refineries should not be sold. 18 years later, $18 billion sank. The refineries are not still working. And we don't see NUPENG coming out on this to try and get refineries to work. So for me, if NUPENG is for Nigeria, then they really need to demonstrate that they are for Nigeria. But then, let me just say before I give way, we are talking about trucking petroleum products from Lekki in Lagos to as far in country as Maiduguri or Sokoto or Kano or Kaduna. Ladi, petroleum products are transported via pipelines because they are combustible materials. Imagine loading this combustible material in a tanker in Lekki and letting that tanker drive for several days on the same roads that motorists are driving on. That tanker is going through villages, towns, and cities where there is a population of people to carry this petroleum product on very bad roads with a high risk of this tanker now having an accident or people coming to scoop petroleum products, then there is a fire and Nigerians are killed. Why are our pipelines not working? Because the NNPCL is got pipelines crisscrossing this country. And President Tinubu is watching the NNPCL and doing nothing about them. Our refineries are dead. The pipelines they have under their management are dead. When will President Tinubu take an action on NNPCL?
All right, so I guess so much to unpack there. There's also the safety part of things, not just energy security and trying to avoid industrial action at this point. But we'll keep tracking and see how it plays out, and hopefully the consumer is protected going forward. Thank you so much, Mr. Nick Agule, for bringing your perspective to us this morning. Thank you so much.
Thank you very much, Ladi, and good morning to all our viewers.
All right, let's delve into another matter now. First off, we see the Nigeria Customs Service and the Manufacturers Association of Nigeria have agreed on fresh measures to ease the burden on manufacturers, including exemptions from a recently suspended 4% FOB levy. At a joint briefing in Lagos, both institutions pledged stronger collaboration to improve trade facilitation, industrial growth, and Nigeria's economic diversification. Take a listen.
The Nigeria Customs Service and the Manufacturers Association of Nigeria have taken a major step towards strengthening collaboration in support of the country's industrial growth. Both institutions met in Lagos following the suspension of the 4% FOB charge in line with the Customs Act of 2023 to discuss ways of easing the operating environment for manufacturers. Speaking at the joint press briefing, Francis Meshioye, president of Manufacturers Association of Nigeria, welcomed the move, noting that manufacturers had long.
We engage, we look at critical issues that affect both the association and the service. And we're able to really agree on some points that will mutually benefit the two entities, that is the Manufacturers Association of Nigeria and its members, and the Nigeria Customs Service with the government on the other hand.
On his part, Comptroller General of Customs, Bashiru Adewale Adeni, assured manufacturers of the service's resolve to balance revenue generation with trade facilitation.
Apart from these issues of 4% FOB, the consultative dialogue provided us an opportunity to review and discuss issues around the operating environment for manufacturing in Nigeria. The engagement highlighted the need for clear alignment between customs trade facilitation objectives and manufacturing sector development needs, with extensive discussions revealing multiple areas of mutual interest and support mechanisms available to boost manufacturing operations for the overall benefits of the Nigerian economy.
Both organizations agreed to set up regular consultation mechanisms to ensure ongoing dialogue on customs policies with the aim of promoting industrial clusters, job creation, and Nigeria's broader economic diversification.
I would say the manufacturing sector sits at the intersection of trade policy and monetary policy, and definitely with that recent meeting there and engagement with the Manufacturers Association of Nigeria and the Customs Service, critical issues around tariffs, clearance processes and competitiveness was talked about. At the same time, the central bank's recent rate cut signals a shift in monetary policy that could have major implications for financing, investment, and industrial growth. So today we're going to be discussing the outcomes from the meeting and some of the other outcomes we didn't get to hear about right there. And joining us to have this conversation, we have Mr. Segun Ajayi Kadri, is a DG, Manufacturers Association of Nigeria, joining me right here in the studio. It's good to have you on the show, sir. Good morning.
Thank you. It's a pleasure to be here.
Yes, and definitely so much was talked about from last week into the weekend, with that meeting that you had with the Customs Service. And I'm wondering, is this the first time you're having this kind of consultation with the Manufacturers Association of Nigeria and the Customs Service? Or have we seen this happen before?
Yes, we have a long history of relationship with customs. And it's born out of the fact that we are major stakeholders of Nigeria Customs Service, and the fact that we have had, in the course of delivering our services, MAN to its members and customs to the Federal Republic of Nigeria, taking charge of trade facilitation. So we've had quite a number of exchanges, but consulting with them, engaging with them at the highest level, with the CG of Customs and his DCGs, the president of MAN, the DG, and key members of the association, for quite some time now, we've not had it at this level.
Right, but definitely there was a lot of conversations, around trade facilitation, and getting our borders, smarter, at this point. But I know there was also a closed door meeting, held there, and I'm sure you can give us some, some sound bites from there.
It was a closed door meeting. As a matter of fact, and throughout the opening ceremony of that engagement, we made it clear that it was like a family meeting, because it's inconceivable to talk of MAN without customs, and also customs without MAN. So we saw it as a family meeting. And that was because there was a critical issue that concerned both of us, manufacturers in particular. And so after the opening, we had to go for a closed door meeting because we needed to discuss a critical issue. And it centers around the 4% FOB that was being charged by customs, which we felt needed to be re-examined. And that general atmosphere, the open meeting, will not be sufficient for us to look at the nitty-gritty, grow granular, and explain things to each other. So happily, that closed door meeting afforded the opportunity, and we were able to come out with an agreement that will be mutually beneficial. One, it will be good for the economy of the country. The concerns of our members were addressed, and we discussed quite a number of issues that will assist customs to perform their role of trade facilitation, enhancing smart development at the port, digitalization, quite a number of things.
Right, and definitely, I'm sure for the man on the street, he'll be wondering, with all of these consultations happening, let's imagine, that we see action, going forward. What does this translate to, for the average man? Does it mean lower prices for the consumer?
Okay, so the 4% FOB was meant to replace the 1% CISS and the 7% cost of collection. But we felt that it was going to be way too high because it was going to add about 186% to the cost of import. And we felt that if this happened, it will fan inflation and, like you rightly mentioned, the issue of the price on the street. So now that this has been ordered down, what it means is that we are only going to revert to what we've had before, which is the 1% CISS and then the 7% cost of collection. But what I would say is that it has saved price escalation. That's what we should look forward to.
Right. All right. So, beyond the customs service, what other, trade-related, policies would you like to see, going forward?
Okay. So I think that there are quite a number of policies that have been put in place by government, particularly, and I would like to talk about the monetary policies. Recently, we've seen the central bank going down just a little bit on the rates. And this has not happened, I think, in the last 5 years or so. So what we are saying is that we are seeing some stability in the economy. And so there is need now to intensify efforts at sustaining the implementation of measures that have been put in place by government to accelerate growth. So, for instance, the beginning, I hope it is, the beginning of the winding down on rate escalation by the CBN is an indication that there is stability in the economy. People are confident in the economy, and we should see it come down some more because, the average lending rate now to the manufacturer is still above 30%. And, I mean, you can't make any meaningful production activity with that kind of rate. So we like to see it come down some more, in direct answer to your question. We also like to see a situation where other regulatory agencies will be able to collaborate with the manufacturers, the productive sector, for us to have a situation where you are not seen as a gate man, you are not seen as a headmaster. You are seen as an agency of government that is to facilitate production, that is to facilitate competitiveness. Because one fantastic thing that has happened with customs, which I think needs to cover, is for you to go granular and understand what will be the impact of what policies, what measures you are implementing. And when you see clearly that it could potentially disrupt the stability that we have, it could potentially increase the cost of production, it could compromise ease of doing business, you come to an understanding amongst each other. Because at the end of the day, it is the whole economy that will be benefited. We also look forward to a situation where we quickly accelerate the exchange rate ease that we are having. I mean, we shouldn't take our eyes off the ball. We can see that Naira is appreciating. We shouldn't do anything to escalate it further because we agree that there's some stability, but the rate is also still high. And except you increase production, except you are able to substitute what you need dollar to import, you will continue to have an unstable and escalating currency.
So, technically, looking at the currency side of things, and now we have the first rate cut in Nigeria in 5 years, it almost seems things are looking up, for your industry, at this point. But going into the next rate setting meeting, how many basis points would you be expecting cuts this time?
Okay, so I don't want to assume that I'm not aware that these things are very technical and that the CBN is looking at a whole pot of activities. But I do hope that from all that they are putting together, they will be able to have reasonable assumptions that will allow them to lower it. We should start to see like 100...
Maybe 100 basis points cut.
Basis point cut.
At the next meeting.
Yes, I mean, you see, we need to send the right signals. And I must tell you, for the manufacturer, we have said that the interest rate that we will prefer that we have should be no more than 5%. And that's a far shot from it. Of course, we do know that it's only specialized banks that will be able to give that. But for those who cannot access it, there's need for the commercial banks to be at a level where they will be able to give much lower interest rate. And we should continue to build confidence. I believe that the central bank is on the right track. We also need to deepen the process such that we do not have lapses. I mean, the CBN was once directly intervening, but it has gone back to playing its regular role, but that void needed to be filled. And I think it's important that the CBN makes arrangement to fill that void and also to lessen the pressure on the commercial banks so that they will be able to have much easier lending rates for us.
Right, and definitely going into 2026 and seeing what we've seen, in this part of 2025, do you see the burden ease further, for manufacturers in 2026?
Yes, honestly, I think we do. Even though we are cautious about that, because 2026 also promises to be a year that will witness intense political activities. I mean, what we have seen in the latter part of 2025 is giving that indication. But we must maintain attention on the economy because it's very important. And we also see that the stability that we are witnessing, government should not disrupt it. And so we should keep moving in the same direction and ensuring that we do not take our eyes off the ball. We see insecurity should be further improved upon. Fantastic job our security agencies are doing, but still more needs to be done. We need to continue to watch inflation, because it has a tendency of escalating towards the end of the year. So we should be very mindful of that. With all the reform measures that are taking place, we should maintain the brake. And then we should watch what is happening in the oil and gas industry, particularly with the disruption that is being threatened now. I think we need to be very careful.
I would like to get your feedback on what seen play out right there in the oil and gas industry.
Yeah, it's a very unfortunate development, I must say. And you see, there is need for us to be extremely careful about what's happening here. Without any doubt, Dangote is a revolution in that industry that I believe every Nigerian should be proud. So it is unconscionable that you have an industry being almost deliberately battered, troubled from every side, one trouble after the other. And I think that it doesn't send the right signal. It is beyond Dangote Refinery. And I think we should be careful about that. If there is any issue about the labor, with the labor unions, there's need to sit around the table. And the law has provided for opportunities for you to seek redress anywhere. So you do not hold the nation to ransom. Just because you have issues. And from what I have read, this matter came to a head when they wrote for their check-off pay. Is that what this is all about? And are we going to destroy a $20 billion industry just because there are these issues? I don't know any businessman who will not be concerned about saboteurs within, or who will not be concerned about the state of mind and the orientation of his workers when you have that kind of investment.
Because sometimes I try to picture in my mind that, okay, just imagine I'm a foreigner, I'm trying to bring in some FDI,
yes,
into the country, and I see some of this drama playing out. It might put a dent on my confidence.
Absolutely. And to other investors who are aspiring to invest big like Dangote, when you see him being dealt with this way, being served this way, it's a complete disincentive. And there are so many other African countries that are beckoning, come and invest here. So I don't think this should be a matter that we should be dramatic about. It's a good thing that the federal government is stepping in, because it is very, very important that we do not allow this shenanigans to go on for too long. We should support local manufacturing, because that is the way to go. And if there are issues, they should be sorted out, not holding anyone by the jugular. It's very important that we focus on that.
Let's hope all sides are satisfied,
Yeah.
going forward, and especially the average consumer, that's been dragged on all sides, at this point. But thank you so much for helping us unpack this. Mr. Segun Ajayi Kadri is a DG, Manufacturers Association of Nigeria. We do look forward to more collaborations, going forward with your association and the relevant industry. Thank you so much for coming.
Thank you so much for having me.
All right, so now let's get a check now. We see the month of September, that's a trading month, that's winding down at this point, and hopefully your portfolio is in the green so far. If you look at the equities market, over 1% rise month to date, that's for this month of September. So it's still, closing in the green so far. Quarter to date is in the green, 18.4%. Year-to-date performance, still a big 38.1% right there for Nigeria's equities market. But let's get a check now on what's played out so far and what to expect in the month of October. Join us for this conversation now. We have Mr. Olatunde Amolegbe, the MD CEO Arthur Stevens Asset Management. Good morning, sir. Great to have you on the show.
Good morning, Ladi.
Yeah, fantastic. I see I'm sure you were trying to make a trade on your phone right there. But that's okay. That's fine.
Thank you so much.
Yeah, but first of all, congratulations on your latest appointment. I don't know if you want to quickly tell us about it.
Thank you very much. The Investment and Securities Tribunal is the capital markets court, is the court where capital market disputes are resolved. Obviously, the SEC is the apex regulators in the capital market, but sometimes there are issues that needs to be escalated beyond the SEC, and typically those matters that require to be taken to court typically heads for the Investment and Securities Tribunal, rather than the Federal High Court, as the case may be. So that's all I want to add regarding that for now.
Yeah, congratulations on that appointment. But let's get a check on what's played out with Nigeria's equities market in this month of September. We're up over 1% so far, just when the last few trading days, of this month. But, for you, aside from the, headline gains we're seeing right now, in your opinion, did we see an outperformance in September?
Yeah, I think it's been a good month, relatively. But if you compare it to previous months, you will it's safe to say that, we've seen what I would refer to as some sort of a slowdown. All right. Previous months we've seen gains in excess of 5%. Some months we've seen gains in excess of 6%. So slightly over 2% for September so far. It's not been too bad. But generally, if you look at the trajectory of things, September typically is normally what you refer to as a slow month, because that's the month where more consumption tends to happen rather than savings. That's the month where you have to pay children's school fee, and other pertinent consumptions tend to happen. So people, I will argue that investors don't tend to save that much in the month of September. So having said that, for us to still have a positive close shows that the momentum in the market is still strong.
Looking at the month so far, this is the first rate cut we've had in 5 years, and it did come in this month. Do you think we're going to see the impact of this maybe October? Some have tagged October a month of October, when it comes to security. Do you think that would lead to such a sentiment in the market?
I think we are going to see a lag. We might not necessarily see the full impact in the month of October. I actually personally feel that some of this, because this rate cut is sort of expected, the market has sort of been expecting it for some months now. I actually feel that some part of it has already been factored into the prices. So we might not see a jump as a result of the rate cut in the month of October. However, over the next say 3 months, maybe by the time we start seeing, say, the fourth quarter results in December or thereabout, or January, then of course you could expect that, these rate cuts could start having an impact, because obviously when you see the MPR cut by 5%, by 5 basis points, what you're going to also see is interest rate starts to come down, and that hopefully starts having an impact on the finance cost of some of the companies that are operating within the system, and that should positive impact on their profitability. That could see us seeing prices start to rise. But for now, I personally feel that this particular rate cut is being factored into prices. So I wouldn't be surprised if we do not see a significant jump in stock market prices, on the back of this particular rate cut.
Right, and definitely we know the rate hikes kind of favor financial services, the banks, but now that we're seeing easing, when it comes to cuts, do you think investors should think twice, about the banking stocks at this point?
Obviously the banking sector tends to benefit from an elevated interest rate environment. There's no doubt about that. Typically, what happens is that we have an inverse relationship with what is supposed to be good for the banking sector is not necessarily always good for the real sector, because an elevated interest rate environment is positive for banks, but it is not necessarily positive for other real sector companies. So we see interest rate will come down, but don't forget that interest margin, while it is a significant contributor to overall profitability for banks, is not the only contributor to their profitability. So there's still opportunity for growth in other areas. Fixed income revenues from other services they're offering. So I think that this little cut might not undermine the profitability of banks for now, all right? But obviously they will need to come up with other strategies to try and plug the hole that will result from the fact that the interest rate environment will now start to come down, and that might not necessarily be positive for them.
All right, we'll keep tracking to see how it all plays out. September is technically over now. We're going into the month. That's the trading month of October. Thank you so much for coming on the show. That was Mr. Olatunde Amolegbe, MD/CEO Arthur Stevens Asset Management, and he was recently sworn in as a member of the Investment and Securities Tribunal. Thank you so much for coming on the show, sir.
Thanks for having me, Ladi.
All right, we'll take a quick break. When we come back, we'll get a check on what to expect for the fixed income market. That's in a moment. Just stay with us. Let's get a quick check on what to expect for the fixed income market now. We have Mr. Chukan Nwachukwu, who's the Chief Dealer, Group Head Trading at UBA. Great to have you on the show, sir. Good morning.
Good morning, Ladi.
Yeah, so we're taking stock now of most of our markets at this point. Talk to me about how yields, treasury bills, and the FGN bonds. What are the trends you saw in this month of September?
Yeah, thank you, Ladi. For the month of September, the fixed income market was filled with activities. I will start with system liquidity. This month we saw huge system liquidity up to about 5 trillion. from FAC payments to NTB maturities to OMO maturity, as well as a coupon payment. And so that actually affected trading in the fixed income market. In the month of September, we saw NTB, auction twice, and totaling about 770 billion was offered. About 2.6 trillion was the subscription, and then about 930 billion was sold. So we saw a drop in the in the yield, especially the 1 year. It dropped about 100 basis points from 17.69 to 16.78. On the bond side, we've only seen there will be one bond auction, which is today. So we're waiting. About 200 billion is on offer, across two maturities of 2030 and then 2032. The auction is ongoing, and then by the end of the day, we know what DMO has for us. So typically throughout the month, we've seen a bullish sentiment coupled with the fact that there is system liquidity, and that has actually driven yield further downward.
Right, and looking into the month of October, what do you see for yields?
So we'll continue to see dip in yield. So we expect that the month of October, going into November, which is obviously the last MPC meeting we hold, and so we expect further cutting rate, and that's also another factor that has also affected drop in yield aside the liquidity. And so in the month of October, we'll continue to see bullish sentiment. Don't forget there's a huge deficit, from what was offered, and then from what was offered and the subscription on the T-bill side. And so those who lost at the auction, we obviously come into the secondary market to fill some of this demand. Okay. And so also liquidity, those who have so much liquidity, we obviously come in to fill some of these demands. So we see further drop in yield in the month of October.
Right. So much to expect there. Thanks so much for helping us break it down, Mr. Chukan Wachugu, Chief Dealer, Group Head Trading, UBA. Thank you for coming on today, sir.
Thank you, Laddie. Thank you.
All right, let's head straight to the global space now. We have John McCraw with the details at this point. Good to have you, Ini. Good morning.
Thank you. Good morning, Laddie. Well, let's just flip through the global slides and see what's going on. Outlook for this week on Monday, that's today. We're expecting Eurozone consumer confidence for September. That's expected today. For tomorrow, a GDP for UK, that's for the second quarter, as well as tomorrow we have job openings in the United States. That's expected by Wednesday. Germany manufacturing PMI is one news that we are expecting. And then on Thursday, we go to Germany, where we're going to Turkey, I beg your pardon, Turkey FX reserve. That news will be out to see how that's the movement in Turkey. And then on Friday, we have US unemployment and employment. I believe we also have Eurozone unemployment data that will be coming on Friday. So it's going to be a data-filled week for this week for the world global economy. Then outside of that, we have for today's Spanish inflation has hit the highest level in more than a year, backing the case for the European Central Bank to leave interest rates unchanged next month. Consumer prices rose 3% from a year ago in September. That's up from 2.7% in August, and in line with economists' expectations. And according to data that was released earlier today, a gauge of underlying pressures eased to 2.3%, defying predictions for an uptick. And then from there, we move to China, where we see that the factory activity probably shrank for a sixth straight month in September, keeping alive calls for more stimulus in the world's second largest economy to fend off a sharp slowdown as the United States trade deal remains constant. We hope to discuss more about China tomorrow about this time. So you want to stay with us and find out some of the things. The survey of 32 economists forecast that the official purchasing managers index would edge up to 49.6% from 49.4%, remaining below the progressive threshold, which is 50 points, separates growth from contraction. And the data is due later on today. Away from China, we head over to South Korea, where the export is expected to rise on chip boost. Of course, you know what has been happening with chip and the taxes and tariffs in the Trump era. Well, South Korea's export likely to rise in September on strong technology demand, with headline growth seen hitting a 13-month high on calendar. And then we end with gold. It's a new high for gold. I don't know, Ladi promised was going to put some money in here. If he did, it's good for him, because gold has hit a new high at 3,300 per ounce, Ladi. So I don't know if you did what you said you would do. If you did, I think I'm going to send some robbers to your house. If you did not, I have no business with you.
But I don't have any physical gold. Thankfully.
It's the money that matters. I'll kidnap you. You go and release the money.
Right. Well, we're not giving anybody ideas, at this point. But we keep tracking gold. I guess $4,000. That's on the card.
But I mean, $200 is still a huge move. So I mean, let's just not think that it's automatically that 200. We know how long it took when we hit 3,600 before we're able to hit 3,800 now. And even at this time, I don't know if it's still here or there's been some profit taken and there's been a bit of a slight reduction. But I mean, this is a new high for gold.
$3,800 per ounce. Incredible.
Yeah, good one. All right, Ladi. Bye.
All right. Details of what's playing out in the global economy, but let's get a flip into the terminal there for some of the stock exchange. That's for Nigeria Stock Exchange. We see the most actively traded stocks right now. Trading is on right now. We see Universal Insurance PLC. That's getting attention by 1.69% up. Veritas Capital, Axis Holdings, Chams. We're seeing most active trades right there on the terminal. Then we see the likes of Thomas Wyatt leading gains, Eternal Oil, Telerams, Cavity Offshore Support. Those are the stocks that are getting attention right there if you look at the terminal on investing.com. Thank you so much for watching the show today. We'll bring you more updates tomorrow. And also, 1:30 p.m. today on Business Incorporated and how investor sentiment is being shaped at this time. Thank you so much for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.